Premier Network. Today, we're joined by Mark Mole from iCapital. I've known Mark for about a year, and he's getting ready to get introduced to the group. He's actually going to be at the Hershey Conference later this year, so we felt like this webinar would be a good chance for him to get his firm and their story across to the group. So, Mark, go ahead and introduce yourself, and then we can get into the Q&A.
Thank you, Sebastian. Thank you for having me. Looking forward to meeting you all. My name is Mark Mole. So my role here at iCapital is a regional director covering the Mid-Atlantic region. We'll dive into some specifics around who iCapital is, how you can access some of the alternatives on the platform and why you would want to do that. So we'll try to keep it as succinct as possible. But my role primarily here at iCapital will be to help you engage in alternatives. That goes from education of the asset classes, that is education on the product, and then the support to actually ticket some of these products on the iCapital platform. And so I'm excited to kind of get through it. Again, like I said, we'll try to keep this agenda very succinct, but please reach out to us and me specifically, because I'll be your point person, anything related to iCapital.
Excellent. Yeah, and we know private markets and private assets are top of mind for advisors. I feel like every day I come into the office, I see an article about it. So this is a timely conversation. And Mark, I know you're going to be a great resource for the group. So let's start general. Can you just generally kind of explain, Mark, how the services that iCapital can provide to the advisors at Cambridge?
Absolutely. And so I will start sharing screen because I think some slides will be helpful along the way. But generally speaking, iCapital is a platform. And so what we try to do first and foremost is be of the highest quality for the types of funds that make it onto the platform. So we have over 25 folks on our research group to actually go out there and screen a lot of the private market funds that make it onto our platform. And just by way of introduction of background of iCapital, we were founded in 2013, and we are by far the largest alts platform out there today. We're closing in on $300 billion in global platform assets. You can see the amount of products and funds and fund sponsors that we work with. But again, we try to then kind of have that funnel to make sure that the ones that are approved and the ones that we work with Cambridge on are the ones of highest quality. These are not products that you kind of find, on mom and pop type PE or private credit type funds. These are very institutionalized type investments. So we have grown to over 2,200 employees across 16 different countries. The other aspect that iCapital provides, and that I had mentioned earlier as part of my primary role, is portfolio construction and education. And so that is something that we try to do each and every day to talk about why you would want to do private market investments and how they fit into your portfolio. Kind of where do you source from and what are some of the benefits, which we'll cover here today. And then lastly is implementation. Everything you find on the iCapital platform will be digital. And so again, making it a little bit easier to submit tickets because these all will be subscription document-based investments. So while you may have a broader alternative menu at Cambridge, the ones that are on iCapital hopefully are a little bit of an easier process to get through.
Excellent. Now, I know, Mark, you mentioned it earlier about why you should hold it. Talk a little bit about that if you could. I know from time to time we'll run into advisors that are skeptical of private markets or alternatives. Talk to us about why maybe it makes sense to hold in an investor's portfolio in this day and age.
Yeah, sure. And I think it really boils down to 3 points. And the number one point that I think is the most impactful above everything else is diversification. We see what's happening in the public markets with concentration and some of kind of the concentration risk that is kind of developing. And so with alternatives, you can really offer your clients, especially your high net worth clients, something different and something that isn't as correlated to the public markets. This is a pretty busy slide, but you could see here in that first column, different subsectors of private equity and private credit. You can essentially see the correlation that they have to the global 60/40 portfolio. Again, almost 0.6 to 0.4 on the private equity side of things, and then private credit is as low as 0.36 if you're looking at distressed. But direct lending, which mostly a lot of folks is definitely the largest category in private credit, has a correlation of about 0.64. So again, the number one point I would say is diversification. Number two is actually opportunity set. So portfolio managers out in the private sphere can actually pick from much larger pool than the public counterparts, public mutual fund managers, right? So on the left-hand side, you can see what has happened to the New York Stock Exchange and the NASDAQ, right? In the early 2000s, we had close to almost 8,000 publicly listed stocks. Today, that number has shrunk to 4,600. On the other side, privately backed companies, backed by private equity firms in the US, have almost 10x'd. So we have gone from about 2,000 companies that were backed by PE to over close to 13,000 today. And then when you dig a little bit deeper and look at some of the larger companies, right? And so essentially in the US, companies that earn more than $100 million in revenue, 86% of those companies are private. I think that's a pretty jarring statistic because that shows you that, if you truly want kind of an allocation to the US economy, you really have to have a slice of private markets in your portfolio. Now, again, the sizing is what we can talk about, and it's going to depend on client and risk tolerance and time horizon and liquidity needs. But ultimately, we want to make sure that there is some aspects of diversification here, and that's certainly what private markets or private equity can provide. And then lastly, I would say risk-adjusted returns. So, I think from kind of the obvious reason that I think a lot of people think about why allocating to alternatives would be the higher returns and also the lower volatility. So again, we're comparing, PE, which is in this sector, which annualized returns is on the left-hand side, annualized volatility is on the horizontal axis. And the global 60/40 over a 15-year time frame has delivered around 8% total return with about a 12% volatility. Obviously, the goal in this chart is to be in the upper left-hand corner. And so direct lending, right, which is a part of private credit, delivers some nice risk-adjusted returns. Buyout and growth as part of the PE sector also delivers some nice risk-adjusted returns, as well as real estate, right? Real estate core, commercial real estate here in the middle also provides some great risk-adjusted returns. So again, I think the three main points is diversification, number one. Number two is opportunity set, and then number three, risk-adjusted returns to add to clients' portfolios to increase that efficient frontier.
I was at a meeting the other day, and the guy mentioned how private equity is kind of taking the place of small cap. So I think this conversation is relevant, especially after hearing that comment. So, Can you talk a little bit about just Mark with our group? Historically, it's been a lot of like in the alt space, non-traded REITs, non-traded BDCs. Obviously, there's a lot more available on your platform. Can you talk about the different maybe categories of alts that you can get there?
Sure, absolutely. And for this, I'll actually just jump right into what the platform looks like. And this platform will continue to grow, right? So you do have kind of a longer list of alternatives available at Cambridge, but ultimately, slowly as those contracts are up, we're trying to get more and more funds available. But you can essentially see three buckets currently available to you. So that's going to be 4 hedge fund products, 7 private equity products, and 1 infrastructure product that falls in the real assets category. For hedge funds, right, that category is going to provide you there's different types of hedge funds, but most will provide you with diversification, right? That will provide you with other sources of return, but you're still mostly allocating to public market securities. So slightly different than just the private companies that we just talked about. On the private equity sphere, you obviously have a lot of good managers there, 7 products. And this is essentially the primary goal is capital appreciation, right? There's not going to be much income coming out of here. So capital appreciation is your goal, longer term time horizon. And ultimately, you want to make sure you're kind of aligning that with the client. Real assets, specifically infrastructure, is going to deliver both income, some capital appreciation, and a little bit of inflation protection, right? And so obviously kind of a triple minor there is providing you with three benefits in one for an infrastructure investment. So I think the goal here is to identify the client, learn what the goals are, and then back into a kind of a holistic allocation to non-traded products. And that's what we can help with. That's essentially our job and our role here each day.
Mark, any type of like, I know in the past these things have been a little restrictive. Yeah, your net worth has to be this. You have to have a minimum, initial investment of X. Like, what does it look like? Is it lower minimums? Is it better access for maybe lower net worth investors? How does that work?
Yeah, and I think the structure of the funds today have really come a long way. And so here we're just comparing kind of your traditional open mutual fund to the feeder fund structure that ultimately has come about, 15, 20 plus years ago. And in the middle is kind of the more popular evergreen funds that are on your platform. And so I'll just start from the right-hand side because ultimately, historically, if you wanted to invest into private equity and you wanted to go direct to a manager, you would need likely, anywhere from, 2 to 5 million plus as a minimum for one fund. That's usually probably very concentrated in the amount of companies that they're investing in. It would also provide you with K1s. You would also need to be a qualified purchaser, which you could see here is a $5 million net investable assets for individuals. So a much higher bar to meet in order to even qualify. And ultimately, it is much harder to have kind of that ability to build a diversified portfolio. The feeder fund structure came along, which lowered that minimum from 500 or 5 million to about 100,000, which is where iCapital still today to this day supports. But it did not eliminate the K1s and the higher qualifications with the qualified purchaser mandate, which now with the evergreen funds moving to the middle with the closed-end registered funds, you can now invest with much lower minimums, starting at $10,000 for some private equity funds here. The liquidity, which I didn't mention on the other funds, is also much better, right? And so we're going from usually 10-year lockups, all the way down to a potential quarterly liquidity. Now, I would say they're not quarterly liquid products, but they have the potential to provide you with quarterly liquidity, which is, I think, a huge step and a huge benefit from where we came from kind of the drawdown funds. You also have the ability to qualify at an accredited investor level, which means you only need $1 million in net worth, excluding primary residence, or you can also qualify by income thresholds. So if you're a single filer and you earn more than $200,000, or a married couple that earn $300,000, you can also qualify as an accredited investor. And above all, it's a 1099 product for majority of these funds. So again, making it much, much easier to kind of invest and be highly diversified, because inside of these portfolios, instead of having 20 to 30 companies, you'll see closer to 2,000 plus companies that are included. So it really does lower the risk from a concentration standpoint.
Got it. Okay. Mark, can we maybe dive into like a specific fund that you're seeing a lot of action in right now?
Sure. And I will just give a very high level 2-minute overview. I won't dive too deep, but ultimately, if you look at the iDirect Private Markets Fund, it is a fund that iCapital had put together to give you direct access to 3 managers. And the direct access is the important piece here, which I'll explain in a minute. But those 3 managers are KKR, which focus on buyout larger, stable private companies and look to kind of gain control over those companies when they invest. You have Vista, which is more of an enterprise B2B tech investor. And so they have been around since the year 2000 and ultimately have been able to deliver some really great returns for investors. And Warburg Pincus, one of the oldest PE firms in America, going back to the 1960s. And they really play in that small to mid-cap space for us in the growth part of the PE asset class. to really provide you with more of a growthier type investment style. And so the important aspect here is that it is direct access. So we are not going out there and buying funds on the secondary market to provide you with access to investments. This is going to give you access every time these three managers buy a company out there. It essentially provides you with access to that in this portfolio. From you as the investor experience, you don't have to worry about that because it's just like a mutual fund structure, right? It's that evergreen component where they will recycle those companies that they buy and sell inside the portfolio. And you as the investor would ultimately just get that capital gain that you would ultimately be used to from a mutual fund experience. The minimum is as low as $10,000, monthly subscriptions in, so you can invest 12 times a year, and the ability to tender on a quarterly basis up to 5% of total NAV of the fund. And so essentially, as long as no more than 5% of the fund is being requested for that quarter, you can essentially get all of your dollars back for that quarter. And it is 1099 tax reporting. So again, it is a global fund. It does provide you with companies across not only the Americas, but also Europe and Asia. And then you can see kind of the split between the buyout and the growth part of the asset allocation.
Excellent. Mark, we've talked a lot about the platform and some product here, but can you talk, obviously there's going to be questions operationally, how does this work? So, I know that there's a portal on the Cambridge site. We have some information here that we can share. Cambridge has a team, but I believe iCapital can help direct if you're ready to submit a ticket or need help navigating, correct?
That is correct. And that is ultimately, I think, the best process is number one, let's figure out the client and what the goals are, and let's pick the products, right? Let's create that portfolio and understand kind of what we want to invest in. Once we identify that, we have an implementation team, and that implementation team is based in Greenwich, Connecticut, and New York City, and it falls under that investor relations group. And so anytime that you would like to schedule a demo, especially we always tell folks for the first couple tickets, please reach out to us. We want to make sure we're walking you through, helping you answer the questions, navigating the platform so that you don't have to figure it out yourself. We have a number that you can always call, or you can email myself or that ir@icapital.com email address, and we can always kind of schedule a call. My contact information, which I'll follow up with this map as well for you, Sebastian, just so you have it on file, but it's going to be right here. So mark.mole@icapital.com. My direct line is right here listed on the page. And so please reach out anytime. I'm happy to kind of coordinate any calls and or any education sessions that are needed.
Awesome. This has been great, Mark, very informative. Any other comments before we wrap this thing up?
No, just I'm excited to start working with many of you all and be a resource wherever I can. So Sebastian, thank you for having me on and look forward to seeing you here shortly at the Hershey event.
You got it, Mark. I always, just for the group, before we leave, Mark's a good resource for the group. I think I would compare him. Many of you watching the recording are familiar with, an insurance MGA. Mark doesn't really have product. He's got a platform. And so you're going to have a conversation with him and he's going to fit you into the proper product that he sees fit. So that's why we really like working with Mark and encourage you to reach out to me or reach out to Mark directly. We'll get this recording and any follow-up materials out to the group. Most importantly, Mark is actually going to be the sponsor of the Thursday Night Football event at the Hershey Conference. So we know that's well attended. We'll be highlighting Mark at that event. And, I'm sure he'll be looking forward to meeting all of you there. So, Mark, we appreciate the support. We appreciate you doing this. And, you have a great day. Okay.
Awesome. Thanks, Sebastian.